Hi, this is Joe Carapino at Blue Crow Trading. I want to spend the next few minutes discussing market sentiment and how market sentiment can be utilized to provide some sense of where trapped traders are, particularly during the opening of the cash market. So every morning on my Twitter account, what I do is I post some articles before the 9:30 open to identify what is the overall consensus with respect to where the NQ is and the general market. And I posted on my Twitter account, and for instance, today I want to share with you some of those articles. Today being the 19th of May 2014. And I want to illustrate an example of how traders are trapped to the short side during the open based on the market sentiment. Now, market sentiment, as I mentioned, is the crowd, the overriding consensus that is being communicated to the masses, and that majority of folks are highly likely to follow during the opening session. So there's U.S. stock futures pullback on Wall Street Journal, clearly painting a bearish picture. There was another article published on Nasdaq.com, futures low as global markets fall, Wall Street rejects record levels. And if one goes to that article to have a look at it, stock futures are heading lower into the open with pressure on global equity markets, disappointing earnings. So all very negative terms and very negative words that are being used here. Lower, disappointing, reaching record highs. So this is all developing the expectation that prices would decrease, defensive posture. So all very clear negative terms being used there. The other article, which was the third one, is futures pointing to a lower open on Wall Street. This article I found on RTT News. Don't really know what they're about, but I was interested in the title, futures pointing to a lower open on Wall Street. Turning in a mixed performance last week, stocks are likely to come under pressure in early trading. On Monday, major indices are pointing lower, coming under pressure, downward momentum for the markets. So this is safer havens like treasuries. So this is all painting a fairly negative picture. And this is the overall market sentiment. So, based on what I saw this morning, there was this overriding opinion amongst the crowds. Now, you can bet your bottom dollar that if these articles are being published on each of these web pages, which are fairly reputable sources, WSJ and Nasdaq.com and RTT News, then this is what the everyone else is reading, right? So one would expect then a continuation of this pullback and of this weakness over here. So let me pull over the intraday chart that I utilize for my trading. For those that are familiar with my range bar charts, this is what it looks like. This is the same chart that I utilize to share the long and short targets that I update at least 4 times a day and send out to folks that either are subscribed to the delayed service or are receiving the real-time service. But what these writers are referring to that publish these articles that I mentioned here is they open up their charts and they have a look at this. This was the previous session. This was on Friday's action, this move over here. This was pre-market, and what is being described as this pullback over here is this price action that's took place here, consolidation, pulling back to this level, and then just before the open, which was 9:30, round about there. At that point there, that's where the market was before the cash opened. So all the editors at these newspaper, all the analysts, they're describing this movement over here. They aren't traders in their own respect. They're just reporting stories, and if they're or news, and if they're reporting news, it's always historical. It simply can be no indication of what's going to be happening in the future. But unfortunately, they are a significant determinant in the establishment of market sentiment. So they're describing this price action over here and this pullback, this rejection of prices. This was a demand auction that took place here. Here was a smaller supply auction, pullback to this level. And for all intents and purposes, based on the market sentiment, the expectation would be a continuation of the weakness, right? So one has this one leg down, second leg down, expecting then a third leg down to then break this low over here. These horizontal bars, these are current intraday level targets for bulls and bears, not related to this time point over here, but more in the future. So just ignore the solid blue lines and the thin blue lines. So market sentiment was bearish, right? And as the market opened at 9:30, we saw a reinforcement of that bearishness up until about that point. And that gave a lot of the people that entered in this pullback over here the confidence that, yes, indeed, what they had read in the articles online and what they were seeing in price action over here was playing out. So here's the expectation that many folks are entering short, and this low is going to be broken, and for a third leg lower. But unfortunately, that's not the way things pan out. Is that these folks that were entering short were trapped. So this is a trap, and if one takes it a step further and one puts on a Fibonacci retracement, I don't use this in my trading. I don't enter based on Fibonacci levels at all, but what I am interested in looking at is Fibonacci levels with respect to how other people are using it. And there are many folks out there that are using Fibonacci levels and saying that if there has been a major move down and there's a pullback to the 38.2 or to the 50% area of retracement, then that's where they're going to be entering short. It should be no surprise that at pullback to 38, at pullback to the 50% retracement, you can bet your bottom dollar that there will be a stack of retail traders entering short right here. Others that were also convinced based on the market sentiment and also seeing this price action were entering short at this level over here. So up until this point, everyone is looking happy. Everyone is quite proud of their market assessment and their analysis. The pullback traders are in the game. Those that are thinking that this is a momentum trade are also in the game right now. And what happens subsequent to that? Well, everyone's kicked out of their trade. Price turns around and continues higher and continues higher. It breaks its previous high over here, and then price continues going, pulls back slightly, pulls back, and then continues going higher after that. So what is the point of the story and the point of providing this discussion on market sentiment is that market sentiment is a useful tool to understand crowd psychology. It's an interesting tool to utilize for the purposes of identifying where trapped traders are, particularly at the open at 9:30. Is it a tool that you base your trading on purely and only? Certainly not. It complements your current entry strategies. I certainly wouldn't be entering or exiting a trade only on market sentiment and only what is stated in these articles. You can adopt a contrarian perspective if you wish. It would certainly help in your trading. Well, I hope that helps. Let me know if you have any questions. As I mentioned a little earlier, I on a daily basis post some of these articles so that I can develop a sense of the market sentiment, and so that you too can have a general sense of where the crowd is currently sitting and their thoughts on future price action. Take care and happy trading.